Good day everyone. Now I will present the introduction to RHB Bank. RHB Bank is one of the leading banks in Malaysia and is part of the RHB Banking Group. The bank has grown over the years through several mergers, including Sime Bank in 1999 and Bank Utama in 2003. The vision of RHB Bank is to become a leading multinational financial services group. Its mission is to provide reliable financial solutions and deliver professional and efficient services to all customers. RHB also offers many types of banking services through its main business divisions. These include wholesale banking, community banking, Sharia business, corporate and business banking, international business, and insurance. Besides that, the bank provides services such as deposits, loans, trade finance, investment banking, wealth management, and insurance. Next, I will explain the organizational structure and market position of RHB Bank. RHB Bank has a well-organized corporate structure with 6 main business pillars. This structure helps the bank manage its operation efficiently and provide better services to different groups of customers. RHB is also one of the leading banks in Malaysia. It has a strong reputation and is trusted by many individual and business customers across the country. Besides that, RHB has expanded its business to 7 Asian countries, including Singapore, Cambodia, Thailand, Brunei, and Laos. This regional presence helps the bank support cross-border banking, trade, and investment activities. RHB Bank is not only a strong financial institution in Malaysia, but also a growing banking group in the Asian regions.
Overview of the bank's product and services. RHB Bank offers a comprehensive range of financial products and services to meet the needs of different customer groups, including individuals, businesses, and commercial. These products include deposit accounts, financing facilities, credit card, wealth management, insurance, and takaful, as well as investment services. Overall, they are designed to help customers manage their finances, grow their wealth, and protect themselves against financial risks. Now, I will consider about main deposit product. RHB Bank provides 3 main deposit products: savings accounts, allow customers to earn interest while enjoying easy access to their money through ATMs, online banking, and the RHB mobile banking app. The current account is suitable for customers and businesses that perform frequent transactions, as it offers check facilities and online fund transfer. Meanwhile, the fixed deposit provides a guaranteed interest rate and higher interest than a regular saving account, although customers need to keep their funds for a fixed period. Second, I will explain about new financing product. RHB offers several financing products for different financial needs. The home loan helps customers purchase residential properties through flexible repayment plans. The personal loan provides unsecured financing for personal expenses such as education, medical treatment, or emergencies without recurring collateral. In addition, SME financing supports small and medium-sized businesses by providing funds for working capital, equipment purchases, and business expansion. And the third one is other financial services. In addition to its core banking product, RHB provides several financial services, its credit card cashback, reward points, and flexible payment option. Wealth management helps customers plan their finances and investment for long-term goals. Insurance and takaful products provide protection against unexpected events, while investment services allow customers to diversify their portfolio and potentially get higher returns.
We'll focus on how digitalization has transformed the way RHB delivers banking services to customers. RHB Bank Berhad has adopted digital transformation as part of its strategy to improve accessibility and enhance customer experience. Through digital platforms, customers can perform banking activities without depending entirely on physical branches. One of the main digital services provided by RHB is online and mobile banking, which allows customers to perform activities such as fund transfer, bill payments, and account management through digital channels. This platform provides greater convenience because customers can access banking services anytime and anywhere. In addition, RHB's integration with Duit Now supports faster digital payments and funds transfer, contributing towards the growth of cashless transactions. Digital onboarding further improved accessibility by simplifying the process of accessing banking services through online. Besides improving banking services, digitalization has also created significant impact on RHB's customer, operations, and the financial industry. First, digitalization has changed customer behavior by shifting banking activities from physical branches to digital platforms. Customers increasingly prefer online and mobile banking because they provide convenience, faster transaction processing, and 24-hour accessibility. Next, digitalization also improved RHB's operational efficiency. The adoption of technology allowed the bank to automate process, reduce manual workload, and provide faster service to customers. Last but not least, digitalization has transformed the overall financial landscape by increasing competition among financial institutions and encouraging innovation in digital payments and fintech solutions. Therefore, RHB's digital transformation strengthened its competitiveness while supporting the development of a more technology-driven banking environment.
My name is Nur Najah Nakia binti Muhammad Zainuri. Today, I would like to walk you through our recent financial analysis, focusing on two critical pillars of our performance over the 2023 and 2024 financial years, our profitability and our liquidity. Let's jump right into how we have been driving value. Next, I will explain the profitability ratios, which measure how efficiently the bank generates the profit. First is the return on asset, or we call it ROA. In 2024, the ROA increased to 0.92% compared to 0.88% in 2023. This shows that the bank used its asset more efficiently to generate profit. Next is the return on equity, or we call it ROE. The ROE increased from 9.42% in 2023 to 9.85% in 2024. This means shareholders earn a higher return on their investment, showing improved financial performance. Lastly, the net profit margin, or we call it NPM, was 36.3%, which increased slightly compared to the previous year. This indicates that the bank managed its operating costs well and retained more profit from its revenue. Overall, the profitability ratio shows that the bank's performance improved in 2024 compared to 2023. Now, I will explain the liquidity ratios, which measures the bank's ability to meet its short-term financial obligations. The first ratio is the loan-to-deposit ratio. In 2024, the LDR was 94.2%, which was higher than 2023 at approximately 92 to 93%. This means the bank utilized more of its customer deposits to provide loans, helping generate higher income. Next is the cash ratio. In 2024, the cash ratio was 4.63%, which was the lower than 2023. However, this level is still considered normal for banking operations because banks do not keep excessive cash. Instead, they invest or lend it to earn returns. Overall, the liquidity position remains healthy with efficient use of deposits while maintaining sufficient cash to meet short-term obligations.
I will explain the asset quality and capital adequacy analysis of RHB Bank for the financial year 2024. First, let's look at the asset quality. The gross impaired loan ratio was 1.47% compared to 1.74% in 2023. This decrease shows that the quality of RHB Bank's loan portfolio has improved as a lower percentage of loans become impaired. It also reflects effective credit risk management and prudent lending practices. Next is the loan loss coverage ratio, which increased from 71.73% to 78.57%. This means the bank has set aside more provision to cover potential loan losses. A higher coverage ratio indicates that RHB Bank is better prepared to absorb credit losses if borrower fails to repay their loans. Now, let's move on to the capital adequacy. The Common Equity Tier 1 or CET1 ratio was 15.5%. This measures the bank's highest quality capital, mainly ordinary shares and retained earnings. The ratio remains well above the regulatory minimum, showing a strong capital base. The Tier 1 capital ratio increased to 16.6%. This indicates that the bank has sufficient capital to absorb unexpected losses while continuing its normal business operations. Lastly, the total capital ratio was 19.2%, which reflects the bank's overall capital strength. This high ratio shows that RHB Bank is well capitalized and has sufficient financial resources to support future growth and withstand economic uncertainties. In conclusion, RHB Bank showed improvement in both assets quality and capital adequacy in 2024. Lower impaired loans, higher loan loss coverage, and strong capital ratios indicate that the bank remains financially sound, resilient, and well-positioned for sustainable future growth. Thank you.
And finally, management soundness. RHB Bank's administrative expenses to total expenditure ratio has improved from 9.76% in 2023 to 8.55% in 2024. This shows better cost efficiency as administrative costs now take up a smaller percentage of total expenses. This improvement indicates that the bank has been more effective in controlling its operating costs, supported by cost optimization efforts and digitalization that reduce manual processes and improve workflow efficiency. It also reflects better internal management and tighter expense control across the organization. As a result, RHB Bank Berhad can allocate more resources toward income-generating activities rather than administrative functions. Overall, this leads to improved operational efficiency and supports the bank's long-term profitability and sustainability. In conclusion, RHB Bank's performance improved from 2023 to 2024 based on key financial ratios like profitability, liquidity, asset quality, capital adequacy, and efficiency. This shows the bank is managing its finances better and maintaining stable growth. The bank is also strong in terms of capital position and risk management, which helps it stay resilient during economic changes and financial uncertainties. On top of that, improvements in internal operations have also contributed to better overall performance. Going forward, RHB Bank Berhad will continue improving through digital banking and technology. This will make operations more efficient, improve customer experience, and strengthen the bank's competitiveness in long term.